Welcome back. Here with us on Bazaar Morning Call, and we've been telling you that the global setup is a little, difficult to say the least. So the start is expected to be a little soft. But right now it's time to take a look at all the stocks that should be on our radar. And our team is standing by with the CNBC-TV18 list of top stocks to watch for exactly that, guys. Good morning and, good day to all of you. Nigel, let's kick it off with some good news. I think Coal India gave us that yesterday.
Well, that's right. Coal India's numbers were good. It was a top-down beat from Coal India. So on the top line and the margins as well as the profitability, it looked quite good. Let's run you through the key reason, though. Since it was a top-line beat and we already have the volumes numbers with us, the blended realization, that came in much better. Novoma was working with a number of around 1,680. It beat their estimates by close to around 90 rupees. And the FSA, which is bulk of their sales, more than 85% of their sales out there as well, you had a beat out there. A couple of factors here. One is they're taking a price increase. And the second factor is a better mix, higher amount of sales to non-par. That's what helps realization. So that's the reason why it was better. And e-auction as well. Yes, the prices did come down, but they didn't fall as much as what the street was working with. So the premium to FSA sales were in excess of around 100%, came in at around 140% odd. So realizations was the key reason of the beat. The margins, well, yes, they did expand on a year-on-year basis. Though they expanded more than what the street was working with. Though on a year-on basis, it's lower because employee costs did take a bit of a hit. They're taking a wage revision. So that explains why. On a year-on-year basis, it's lower, but it's still better than what the street was working with. Coal India opens up in the green. Vivek joins us to tell us about Siemens. Morning, Vivek.
Well, good morning. We're looking at Siemens. Siemens largely inline set of numbers. However, one thing that's missed the street estimates as well as our poll has been the fact that margins have been a slight miss. Now, Q1 order inflows, however, continue to remain the bright spot above the 5,000 crore mark for multiple quarters in a row. And, given the fact that it's come off a high base, largely expected to be tepid. However, the number of 5,000 crore is something that analysts have taken a bit of, hope from. Looking at the numbers themselves, the revenues have stood at around 4,873 crore, in line with our poll. And on a year-on-year basis, it's up almost 14.5%. Profitability too largely in line, coming at the 450 crore mark. EBITDA 567 crore versus our poll of 563 crore, again largely in line. However, EBITDA margins have missed by around 60 basis points. This on the back of higher costs actually going ahead and denting margins. Now, what UBS has to say is that UBS feels that it's a top line beat of almost 7% as far as the Siemens revenues are concerned. However, according to their EBITDA margin poll, it's 100 basis points miss. New order intake run rate remains above 5,000 crore for the past 3 quarters. So again, that is something that they've highlighted as a positive.
Okay, thank you very much for that. I'm watching for Happiest Minds. In a nutshell, the revenue growth was strong, margins have declined, and the FY24 revenue guidance is in question. So these are the 3 key points. Let's start with the top line. The top line growth looks good, 3.5% quarter on quarter. Year on year, it's a growth of about 13-14%. But margins have fallen on a sequential basis. Now, the company in its release has said that we're on track to achieve a $1 billion of sales guidance by 2031. Now, this requires the company to grow by 25% every year, which will be done via a mix of organic and inorganic acquisitions. For this year, the company was looking to do some acquisitions to help get that growth. Significant acquisitions is the word they've used, but those acquisitions have not closed as of now. So the company has said they will update the guidance target in October based on the M&A progress. So whether the company achieves their FY 25% top line growth guidance for this year depends on the company closing in an acquisition of their size. So that's about Happiest Minds. What about Birla Corp?
Birla Corp, the numbers actually were mixed, but we are going with green out there because there's an improvement in what you've seen. And Mukutban, there is some kind of improvement that we're seeing out there. So on the top line, there's a growth of close to around 9% odd. The EBITDA number, well, that improved by close to around 15%. Now, some on the street were expecting an EBITDA number of around 320 crores odd, while others were expecting around 260, 270 crores odd. So they come in the middle of that. And there is some mild margin expansion. Power and fuel costs, that's cooled down. That's clearly worked in their favor because out there, in fact, there's a compression of close to around 17%. Though the profit number did see some pressure because of higher depreciation since they've commissioned a couple of facilities. And since the debt has gone up, that's why, in fact, in the PAT number did see some compression. Volumes, though, they continue to ramp up, and the EBITDA per ton did improve a little bit to around 664 rupees since it has valuation comfort, going with the tinge of green on this one. But let's hop across to Sonal. She's standing by to tell us about Oil India and Phoenix Mills. Sonal?
Good morning, Nigel. Let me start with Oil India. So it was understandably a decline on a quarter-on-quarter basis because of lower oil prices, and gas realizations were capped as well. But margins expanded this time. So revenues were down 18%. EBITDA was flat at 2,400 crore rupees. Margins, they came in higher by around 1,000 basis points, but profits were down 10%. Crude oil realizations came in at $76.85 per barrel. But going with green here, because now crude oil prices are at $86 per barrel, so that bodes well for Oil India. If we talk about Phoenix Mills, it was a good set. The revenues were up 52%, EBITDA up 52%, margins came in at 61%, profits were down 61%, but that's because in the last quarter there was an exceptional income. Strip of that, numbers look good. Going with green for Phoenix Mills.
Okay, so Phoenix continues the good run from the real estate side. Sonal, thank you for that. Back to Vivek. Vivek, I think you're looking at data patterns and IdeaForge, my God, there was a bit of a crash landing for the drone in this quarter.
Well, you're absolutely right. So first, let's have a look at data patterns. Very good set of numbers from the company. Even though, profitability was aided by higher other income, even operationally, it's been a strong quarter for the company. Revenues higher by almost 31%, coming in at close to the 90 crore mark. EBITDA, core EBITDA has jumped up almost 31% on a year-on-year basis. And despite that, margins have been maintained close to the 31% mark. Profitability higher by 86%, aided by higher other income. Along with that, the company has also given a 2-year outlook, and it's a strong outlook that the company has given. They're expecting top-line growth of almost 25% CAGR. Along with that, they're expecting sustainably higher margins of close to 40%. Along with that, when you're talking about the current order book, quite strong, over 1,065 crores. This includes the orders that the company has received in Q2 so far as well. On the other hand, like you mentioned, IdeaForge, largely weak set of numbers as far as Q1 is concerned. Revenues down by 2.5%. However, the core EBITDA has disappointed, down by almost 48% on a year-on-year basis. Margins to 29.4% versus over 55% last year around. Profitability lower by 54%. Cost of material, employee benefits, all of these have gone ahead and impacted the operational performance of the company this particular quarter.
Okay, all right, got that, Vivek. Thanks very much. Let's go back to Sonal, who's looking at Aarti Industries. More of the same here when it comes to chemical companies, Sonal?
Oh yes, Aarti Industries saw sharp decline both on a YY and on a quarter-on-quarter basis. Now remember, Aarti Industry caters to segments like dyes and pigments, the discretionary side, which is 50% of their portfolio, and that is something which has been facing headwinds, and that's why revenues declined 12%, EBITDA was down 30%, margins declined 300 basis points, leading to a profit decline of almost 48%. Even on a quarter-on-quarter basis, there's no relief. Revenues down 15%, EBITDA down 21%, and profits down 52%. Management commentary in this case will be important to understand because now there's some relief in the pigments industry that is in the that's in quarter 2. So that is something we'll be watching out for.
Okay. Let's go across to Nimesh to get a handle on the big block deals of yesterday. Who were the buyers? Who were the sellers?
Hi, Rima. So, there was a long list of large block deals. A couple of them are part of my deal sheet chatter as well. I'll start with Minda Corp, confirmation of a clean-out trade. PHI Capital has sold its entire 5% stake via block deal. And in terms of buyers, Society General and ICICI Pru were some large buyers. The second is Ganesha Eco. Even there is a confirmation of a clean-out trade. So MCAP India Fund sold its entire 3.5% stake in a block deal. PNB Paribas Arbitrage Fund was a large buyer there. Couple of other PE exits as well. The first one is 361, which is erstwhile IFL Wealth. In there, General Atlantic sold close to 40 lakh shares at around 500 rupees per share. Some domestic mutual funds were buyer there as well. Bikaji Foods, again an interesting deal where Lighthouse sold close to 35 lakh shares at an average price of 480. And the big one was Inox Wind. The promoter entity sold 1.4 crore shares by block deal, and some large funds bought there as well. So domestic mutual fund was buyer in most of these large blocks, but there were two clean-out trades, which is Minda Corp as well as Ganesha Ecosphere.
Okay, all right, got that, Nimesh. Thanks very much. Block deals back on the radar. Let's quickly recap our list of top stocks to watch. The ones that have positive news flow are Coal India, Siemens, Birla Corp, Oil India, Phoenix Mills, Data Patterns, and of course a lot of the multiple block deals that are keeping stocks in focus. The ones that have negative news flow around them this morning are Happiest Minds, IdeaForge, and Aarti Industries. Okay, let's add one more stock to watch in our list, and this is Adani, basically the Adani Group, particularly Adani Wilmar. Now, this is a Bloomberg report. Bloomberg is stating that Adani Enterprises has been considering a potential sale of its 44% stake in Adani Wilmar. The conglomerate is exploring selling its stake in its Mumbai-listed consumer staples joint venture with Wilmar International. perhaps freeing up potential capital for the core business. Bloomberg reports that Gautam Adani and his family may retain a minority stake in a personal capacity following a sale. CNBC-TV18 has not yet verified the report independently. We have reached out to the Adanis for a comment, and we're awaiting a revert from the group.
Important news there. But let's go across now to Manisha to get a roundup of all the action from the world of commodities. Manisha.
Well, thank you so much for that. I'll start with the crude oil prices, where we are holding the 4-month highs between $85 to $86 a barrel. The EIA has forecasted oil global supply deficit in 2023, and that seems to be supporting. At this point in time, the reason the markets are wobbly is because there is strength in US dollar. The China trade data that came in yesterday wasn't so great, and the China inflation numbers also have continued to decline for the month of July as well. This is a 10th straight decline coming in for inflation, and that weighs onto the market demand forecast as well. So is the reason you're looking at a bit of a decline coming in for the crude prices. But it's a definite decline for the metals as a sector. Here we are looking at copper prices trading at a 1-month lows. Steel is trading at a 2-month lows. The gold and silver prices have declined to a 1-month lows as well. What the markets are waiting for right now is the U.S. official comment. That would come in plenty today and tomorrow. And the U.S. CPI numbers come in tomorrow as well. So those inflation data also is what the street will react to.
Okay, thank you very much for that. Get into a break. On the other side, we'll be joined by Devin Choksi, Director at DR Choksi FinServ, to discuss some fundamental stock analysis. Later on, we'll also be joined by Vivek Parthiban, CFO at Kaplan Point, to discuss the Q1 performance.